This is pretty new, right? This podcast?
Yeah.
Yeah.
We're still getting there.
You should see our first 4 episodes.
These tables too are like a makeshift.
Yeah.
That's how you do it.
I know. Got to get it started, you know.
It's fine. Looks great.
Mute everything. How was the drive? I assume you guys rode together.
It was
good.
He's an Alpine.
It wasn't bad. I walked. Yes, I definitely walked. Well, for some reason, the maps took us to a different building. It took us to 2000 North, not 2000 West.
Yeah. Oh, you're right. That's
I've
my
done
bad.
that.
Yeah.
I've also done that.
I also plugged in 2100 and sent it to people.
Cool.
Yeah.
Oh, yeah?
Yeah.
That's funny.
Actually, at all my time working at Young Living, I was on the street for years.
Yeah. Oh, yeah?
Yeah.
We had like 4 buildings until we built that one. So it's always weird coming. I always end up back up here.
That's
so
what it
proud of you
seems
getting
like
out of
for me.
MLM.
Hey,
so
I'm
happy
proud of
for
you too,
Seriously.
You were new skin? Is that what it
Yeah.
was?
Yeah.
It's like, we were just talking about this yesterday, how incestuous the industry is.
Yeah.
And people end up just bouncing from one company and then coming back to the original company, going out, and you go up, you level up every time, and it's just, you get stuck.
Yeah.
And like,
Yeah. You know everybody,
man.
you know all the same people.
Yeah.
Honestly,
It's like nobody
software
wants to
engineering
be in
is
it,
like
but
that.
You're just stuck there.
Software engineering is the same way. It's
That's-
either plural side over. It's all the same ones that
Yeah.
they bounce back and forth.
Yeah. And since we're all up here anyway, you end up having lunch with the same dudes.
I was
Yeah.
down at Vivint over here. I was at plural side over there. So
Yeah.
same thing. This was my everyday for a long time.
I feel like Vivint's probably the biggest one out here.
Yeah,
It's
yeah.
like that
Vivint's-
everybody works for at least once.
Yeah.
100%.
At least once.
Yeah,
Yeah.
I worked for them when they were Apex,
Yeah.
So did my brother.
I knocked
Yeah.
2 doors for them. for
way
a
back.
Oh, did you really?
Yeah, I did.
when it was Apex.
Yeah.
Oh, see, we're old.
Yeah.
I remember when they changed their name. My brother worked there when it was Apex too.
Mhm.
Yeah, there's too many complaints. They
Yeah.
had to.
Well, yeah, let's get all fed and stuff. In the meantime, I guess we'll say that I'm all hungry.
Yeah. Did you guys
Boil
want
ourselves
drinks
up?
or anything?
We got
We
some.
got
We got
yeah.
some. Yeah,
Nice.
I gotta be careful because, like, dude, I like pee
we
a
can
lot. When I
pause.
drink and I sit, I
We
like
can pause.
pee constantly.
So do you just water fast on like long drives?
I kind of do. And if I have like a
Same
long
way.
meeting, I won't drink beforehand.
yeah,
you
yeah.
know.
No, I get that way.
That sounds rough because whenever my wife and I go on like long drives, I have to have something I can drink.
Yeah.
I have to.
Yeah. I mean,
Yeah.
you can, but then you're stopping.
Yeah.
A lot, but.
Well, guys, welcome to the show. Just for people listening, we're here with the guys from Soon. This is Mike and Aaron. I'm Dallin. We're also here with Dimitri, going to be asking some questions. He's part of the nerd ecosystem, so we'll get into that. In fact, let's just start there. I'm sure you've been seeing Nerd this last little bit. I've been talking about it to you a lot. So really what we're doing, we've got a lot of goals for Nerd. But one of those goals is that we are trying to get, we're helping other brands that have blockchain centered goals to build not just like the blockchain solutions, but pretty much their whole tech stack. So we're building the front end apps, we're managing their data, we're helping, with all of that. So we have right now about a dozen brands that we're working with. There are a few that are pretty far in. There are a few that are just brand new. It's been a really cool time. One of those brands is a brand called Elevate, and that's where Dimitri is. And that's why he's here to help me hang out with you guys. I figure he's got better questions than I do. So.
Awesome.
Hardly. You guys are going to be far more experts than Don or myself are, but we're excited to be here with you guys and excited to talk about things that we're very passionate about. And really what it comes down to is I think we're all trying to achieve the same mission here, which is lower this barrier to entry. And we're approaching it from different standpoints and trying to solve kind of a different target market by doing that too. So we're just really excited to have you guys here. And also, I mean, you guys have gone a long way, and we have this beautiful like building, but you guys have been bootstrapping it from the beginning, right? You guys have been with the Y Combinator route, and I see you guys are now on Republic and some crowdfunding going on.
Yep.
Yes. Yes. Yeah. So no, things are going really well. By the way, thank you for bringing us on here. Appreciate it.
Absolutely.
We're fans of Nerd. We've been fans of Nerd for a while. So
Yeah.
but we're in a different world. We're still working out of our home offices right now.
Yeah.
And probably plan to do so as long as this is one of the things that Y Combinator really pummeled into our brains, which is, just be as lean as you can for as long as you possibly can. And when everybody else is going out and, spending a lot of money, be the ones who are, super, super lean. And so we tried to embed that into our culture and spend as little as possible and move towards, profitability and those things as fast as possible. So yeah, we're very much in that startup phase right now.
How long has this startup phase been going for you guys?
Oof. It's been going for quite a while. I mean,
Yeah.
if
Way
you
too
really
long.
think about like the ideation phase, it's been years. But even when we finally formalized, I think it's been 3 or so years. We started reaching out, really trying to get investment, solidifying on the idea. And even then, we've pivoted so many times that it doesn't look like anything near what it was at the beginning.
Yeah.
Mm-hmm.
Which, I mean, that usually is how the process goes for a successful product, right?
Yeah.
It's,
Yeah.
this
Yeah.
isn't it. Let's
Yep.
keep going.
Yeah.
Yeah.
How many? How big are you guys? How many employees?
So it's myself and Aaron. We've got a VP of analytics. We've got 2 engineers that we work with, a marketing agency that we work with a few guys. So it's fairly small. We've kept it very lean.
Yeah, that's awesome.
And within your roles, do you guys specialize in anything in particular?
Um,
More product,
yeah,
related,
yeah. There's
technology
some specialization. I've got a software engineering background,
related? Gotcha.
and so I do a lot of that. I'm also a product background, so I focus on that. But we're co-CEOs, so we wear
Gotcha.
all of the hats all
Yeah.
the time.
Yeah. Yeah. I'm more focused on the marketing side and
Yeah.
that kind of thing. Yeah. But
I browsed your TikTok. Those are some good videos. I like
oh
them.
yeah.
Yeah.
Yeah. Well, okay. Great. Maybe more people will think so and actually watch them.
Yeah.
You have some good views on those.
Yeah,
Like I would be
yeah.
proud of it. Yeah.
Oh, thanks. I'll show you how I do it someday. But, no, we try to have fun as much as we can. So
Mhm.
yeah.
That's awesome. So we had some questions that we sent you guys before, and you were kind enough to get some answers. And I realized that I'm now asking you to re-answer these questions, but just for so it's in your mind. What inspired you guys to actually do this? How did you you talked about the original ideation, but what was the actual inspiration that got you here?
Yeah. You want me to talk about it?
Yeah, go right ahead.
I mean, so many different things, so many different ways we can answer that because, I mean, just from a perspective of why are we starting a business? Because I don't care what you're doing. It is hard. It is so hard to start a business and from scratch and try to build it, to get something that actually works and then convince investors. I think for me, growing up as a kid, my family always had my dad was always trying different things, throwing different small businesses at us. And so we even would have us go door to door and sell little knickknacks and things. We'd go to fairs and have a little booth and sell. And so I kind of got this feeling of I want to do something that works for me. I want something that builds income for me, and I want to own it. I want to. It's kind of I think of a business kind of like a vineyard almost, right? And you have people who go out and pick off the apples, but then the guy who owns the vineyard, we get to take a few that kind of fall off the tree, and but the harvest goes to the man who owns the vineyard. And I always felt like in my jobs, as I was developing in my career, I didn't want to just have a few of the apples that fell off the tree. I wanted the harvest because I'm working so hard.
Yeah.
And so I want more of that to come back to me. And so because with that you can do so many things. You can create a better situation for your family. You can create more stability for yourself. But then you can also take that value and go and spread it out in the world and multiply it and help other people. So I think for me, there was always this desire to be an entrepreneur and build something. And Mike and I both, we were both into crypto really early, or at least I think early for most people. I bought one of those first butterfly miners back in 2013.
Wow.
And But I was
Well
brand
done.
new married. I know, right? I thought I was smart, but we were just brand new married, and we had just had a baby, and we were broke. And the computer that I had connected to it, I was getting like 2 Bitcoin a week, and the computer I had connected to it.
Can you imagine?
broke.
Perspective. That was
Yeah,
just
perspective.
Perspective.
Yeah,
today.
I didn't think it was much. I was like, whatever. I mean, at the time, it was worth like $20 or I don't know. And so I was like, oh, this is cool. And I was just gonna have them build up, and then the computer broke, and I'm like, I can't afford a new computer, so I just walked away from it. But Mike and
there's
I.
still a wallet somewhere.
That
Sounds like we need to prioritize this.
yeah, I need to
Aaron.
go see if I can find that hard drive and like see if there's something on there. But I think Mike and I have always been pretty passionate about the underlying principles and the guiding the guiding vision behind what was behind blockchain and Bitcoin, and then also just finance in general. I think we kind of had a passion for that. But I think it really kind of, for us, it really started to solidify. You get into your career, you start making a little bit more money, and you start thinking, I should probably do something with this money, but maybe you don't have the experience, right? And so I think for us, it was, we kind of wanted to find a way to build something that would serve people like us, because we didn't know what to invest in or how to invest. So something that was a little bit easier and automated, right? But we also were inspired a lot by a book we came across by a guy named Nassim Taleb. Maybe you could speak to that a little bit.
Yeah. So as we were kind of getting into looking into different options for investing, one book that stood out was Anti-Fragile. And the reason that one stood out is because we were trying a handful of different strategies. I put some money into Robinhood, lost basically all of it. Put some money into a handful of other things, lost basically all of it. And so I'm a developer, and so I look for like the fastest, laziest way to do anything that I possibly can. And so I started looking into some potential options for like, how can I automate this process? What are the best practices? And that's where that book kind of came out. You start looking into that, and in that book it says, look, if you try to predict the market, you'll fail, because the market is unpredictable by nature. And there are patterns that you can there are patterns that you can see, but there's no guarantee it's always going to follow that exact same pattern. And so I even put together a handful of like predictive algorithms and tested them out, and they performed well enough to get me excited. And then like the next time I would run it, it would lose all of its money because of something like that.
And were these like little models you were building on your own banking data?
Yeah, it was models building on my own transaction data actually.
Yeah.
And so one of the reasons that we really got into this, and the reason that we got so passionate about it, is because we had some discretionary money ourselves, as Aaron was saying. We were in our careers and we wanted to try and invest it. And I also saw a lot of people around me, and cryptocurrency was one of those things that had this tendency to divide that group of friends that I had in half. Some people just got it and dove into like the technical aspect and were able to see, okay, I get this. They started their miners and they started all of those different things and understood how the blockchain works and all of the things you could use it for. And then there was the other group, and they're like, hey, I see everybody getting into this. I just don't get it. I don't understand it. How do I get into this? And the further they would get in, the more confused they would get. And so not only did we learn through Anti-Fragile that there's a better way to approach this, but we also learned that it needs to be approached. We need to have some way to unify those two separate groups, the people who just understand the technical aspects and the people who don't but still want to benefit from it.
Yeah. And I think, just to build on that a little bit, one of the, as Mike was building out these models, one thing that when we were reading that book, he talks about how there are some things that get stronger with more pressure, or more randomness and chaos. And so he talks about like your immune system, right? The more you pound it, the stronger it gets, or your muscles, the more you shred them. Talks about the hydra, you cut off one head and it grows two, right? And so we're looking at crypto and we're like, man, talk about chaos and randomness. Look at the price action on those assets. It's the most volatile thing on earth, right?
Yeah.
That has significant volume and traction and people involved. And if you look at, it's something like 80% of Americans who've never invested in crypto, right?
Large
The
amount.
vast majority.
Yeah.
Right.
And there's two major reasons why they aren't. The first, it's volatile,
It's
right?
scary.
Which is scary, right? It's also stressful, right?
Mhm.
And the second, it's complicated. It's
Yep.
really technical, and it takes a lot of time to figure it out. And so as we kind of were thinking of like and building, along these lines of like the anti-fragile concepts, and they just started to kind of come together, we realized there may be a way to take advantage of the volatility and find opportunity within it, and at the same time create a simpler model to invest that requires less effort, less experience, and less emotional investment.
Yeah.
And that kind of going down that path and coming from ourselves of what we needed. We also wanted something that was easy, but also that didn't cause us to, one of the things volatility tends to do to humans is make us stupid, right? Because there's fear, there's FOMO, there's panic,
Emotion.
there's FUD, there's greed, right?
Yeah.
And so we tend to it's doing this, and so instead of it being a logical, movement of things, it turns into an emotional roller coaster.
Always.
And so we're building from that perspective, and trying to find ways to help from a human perspective to avoid those traps, but also to make things a lot easier.
So did Soon start out with simply just this idea of, given this volatility, we feel like dollar cost averaging is the best strategy? Or Mike, did you say, I have
Yeah.
all these models, let me deploy them across all these people
Yeah.
and see what wins?
No, so dollar cost averaging actually wasn't there in the beginning. It was the other side. So one of the things that
So, gotcha.
Yes,
I
one of
love
the
that.
things that we really wanted to be able to do is essentially create some level of randomness, like simulated or not, some level of randomness that would check investment positions that you hold in your model. And if it's above a certain threshold, if it's ripe, for example,
Yeah,
then liquidate it.
correct.
And so that was the idea. And we couldn't find anything else out there that did that. And so we started thinking of some ideas on how we could create the randomness. We also didn't want to get into like a heavy regulatory scope. And so one of the things that we realized is that one thing that's fairly consistent among users, but among people, but isn't necessarily tied to the market movements, is people's spending activity.
Yeah.
And so that's kind of where the idea was born. Like, what if we created a platform that allowed you to invest in something and potentially diversify it? This is where the idea was kind of germinating from a seed. But really, what if we tie their spending activity to it and have that trigger checking their investments to see if it's up?
And where did the signal of spending activity become? What's the story behind that?
Yeah,
That's
so-
very interesting to me. Out of all the things that it could be,
Yeah.
spending activity.
So there are a few things that are important with the randomness. You need to pick a random time.
Mhm.
That's important. And you also need to pick a random amount. That's probably just as important. Because if you end up liquidating the entire position, there's a possibility that you'll end up liquidating too quickly.
Right.
But if you pick a random amount that's not necessarily a high amount, and people tend to spend in between $10 and $30 on average. Obviously, there are bigger spending activities, but that's the average in between. If you do that, then what you end up doing is taking it when it's ripe and then allowing the rest of the position to mature. And so that randomness kind of guides it. And so we tried to think what kind of randomness would give us that? What's going to give us random times, random quantities, throughout the day, and then also random totals. And that's how we landed on spending activity.
Yeah, and
A little closer on the mic.
oh, sorry. So one of the things that Taleb kind of speaks to is randomness, but also non-prediction, right? The systems that tend to be anti-fragile, or that tend to exhibit those types of behaviors. So basically, performing better or getting stronger the more volatility, they're not trying to predict the future, and they're just responding very quickly to random events. And spending allows us to have a non-emotional, disconnected,
Uncorrelated.
uncorrelated,
Basically
random event in time that is not predictive,
Yeah.
right? And so we kind of, like Mike said, we kind of started with the other side of it. How do we figure out when to sell, right? Which can often be the more emotional and difficult part for consumers and retail investors. Like,
So it'd be like take profit.
Yeah,
I think
exactly.
that idea.
Yeah.
Yeah.
exactly. It's one thing to take your money, your hard-earned money, and you have an emotional connection to, and throw it in the markets. It's another thing when it's in there, right?
Yeah.
And you're now watching it do all this stuff,
Yep.
and that's when you get soaked in or
And then-
sucked in.
And another thing to trust a third party
Yeah.
to say,
Yes.
I will let you press that button to say sell.
Exactly. So we kind of came at it from figuring out, and this is part of our evolution, right? Because we now are a much more holistic investing platform where we're working on automation across every aspect of it. And we can kind of move into that. But I think, we wanted a way that you could sell your positions without really knowing you're doing it and get notified after the fact. And that's how our product works right now. You'll get a notification after you leave the store or wherever it is, and you find out that you exited some assets when you were going. Now that's kind of where it started,
Mhm.
but we eventually realized, really quickly as we were running our models, our algorithm performs a lot better if we are taking a lot of different positions over time and spreading it out over time. Because what it creates is a lot more randomness, right? Again, it feeds into that kind of the anti-fragile mentality. We wanted to generate a lot of randomness. So by taking your investments and instead of dropping them all at one point in time, you're spreading them out over a month. Let's say that you're doing $300, okay? We spread that over 30 days.
Oh, so
Okay.
you take my deposit and you drip it.
Yes.
Yeah, exactly.
Yeah, exactly.
So
Gotcha.
the whole reason
Interesting.
behind that is
So you dollar cost average in.
yes. It's kind of like
Yes.
dollar cost averaging in, and then also kind of dollar cost averaging out. Yep.
Yes.
That's
And-
interesting.
Yeah, so it all comes from the place of option, the beauty of optionality, really. And this is something that Y Combinator drilled into our heads outside of our specific implementation, but just in general, the more options you have from a business perspective, the more options that you create for yourself as an individual. Even Anti-Fragile talked about the fact that the more options that something has, the more resilient it's going to be to failure. And so we started to realize that by having, let's say hundreds of different positions a month, as opposed to just like five, let's say you invest in 5 different assets, having only 5 different positions a month, that gives you so many more options to capture good price points and so many more options to be able to liquidate. So say you do invest $300 in 5 different assets. Over 30 days, that's 150 different positions. Whereas if you hadn't done dollar cost averaging, that only would have been 5 different positions. And so 150 different price points. And cryptocurrency is wild. It moves like crazy. And so every single day you're going to get a different price point, and you're going to have another option with a different probability of realizing that gain.
Yeah. So we're essentially plotting out a bunch of different positions over time, and our algorithm is tracking each individual position. We treat it like it's its own node. Like, so it's like we don't care necessarily like here's all your Bitcoin or here's all your Ethereum. We may present that in the user experience to some extent, but the algorithm itself doesn't really care. What it cares about is
cost basis.
yeah, exactly.
Mhm.
How much was purchased and what was the price in that
Yeah.
position.
Yes.
And then we're tracking each one. I mean, you couldn't do that if you were, even a day trader would struggle to
No,
manage
It's hard to
150
do that.
positions per month that we're adding, on top of each other. And so we're really creating a ton of automation for the consumer on both the buying and the selling side.
Yeah.
We also automate transfers, so we're moving money out of your bank account according to your schedule.
Yeah.
And then what we can do is we can set it up for you to kind of decide, do you want short-term liquidity or do you want to do kind of more long-term? So we can batch up all the earnings that you took through the week, and we can sell those. We can send those back to your bank account weekly, or you can have them reinvested. So, and you can even decide what percentage you want. So you could say like, hey, 30% I want to be just reinvest my earnings back in.
Yeah.
70% I want coming back to my bank account weekly. Right.
Oh.
So you can, whatever you want, you can set that up.
And for the reinvestment time horizon and the liquidity, how does that also work in conjunction with the selling of the crypto for gains if I were to make a transaction? Is that a feature that's always on, or is that something you toggle on and off for users?
You can toggle it on and off. So for example, if you have that toggled on, you can set your percentage to, let's say 30, 50, whatever percent that you want. And then as soon as it sells, it basically falls back into the dollar cost averaging bucket and then drip invests over time.
Yeah.
Gotcha.
And then kind of, I guess, we're kind of moving through our product here, which is not a bad thing, right? It's kind of what we're here. So we also provide multiple options for triggering the sale of your gains. So you can use your spending, and you can add in multiple bank accounts. So you can add in all of your credit cards, your debit cards. So you're getting your credit card rewards over here. Well, on top of that, we can also reimburse some of that to a certain extent with your gains, your investment gains, right? We're also selling gains. Like our algorithm, when we get notified of some type of trigger, say you spend and buy a sandwich somewhere, say it's $5, we will take all of your positions and we rank order them. So we sell your highest performing gains first.
Right.
We may even sell multiple positions at a time, and up to $5. So you spend $5, we'll sell up to $5, right? But we also have other options for triggering the sale of your gains. We've got some integrations with OpenAI, and you can also manually set up your own configuration however you want, different thresholds and things to kind of manage it yourself. So we've built in a lot of features and functionality there. But the other big thing that we automate that really is huge and our customers love is taxes.
Right. That's the second biggest part of this equation is
Yeah.
I experience constant selling of any
Yes.
investment vehicle creates taxable burdens, and most people don't want to have to deal with those burdens.
Yeah.
Yeah, because I mean, obviously it gets
Complex.
expensive, and especially because it's complex, it gets really
Yes.
complicated. That's
Especially with
one
small
thing.
positions, which was
Yes.
those micro positions that we're taking, right?
Yeah, I mean, I could imagine that at the end of the year, if you have hundreds or even thousands of different positions that you need to report on, it can get difficult to figure out how much you need to pay and whatnot. So that's actually something that we do as well. So we will track all of that for you because we track all the positions, all the cost bases, and also because we track when it was liquidated. We have all that information. But in addition to that, we can also set something up called a tax stash. And so the way the tax stash works, whenever you take a gain, whenever you realize a gain, it can set aside a portion of that gain in a tax stash that just sits there until tax season comes around. And you can use that to cover your expenses. You can set that up to 25%. You can set it up to 10% if you want. You can even set it up. One of the things that we're working on implementing right now is tax loss harvesting.
Yeah.
So now that you have this wealth of
Right.
money in your tax stash, let's say you go through several months, you have a few $100s or so in your tax stash, and now you have some positions that aren't really profitable for you. They're at a loss. You can sell those and take a discount on your taxes, and then reimburse yourself with that tax stash. And so it lightens the burden of those losses.
Yeah, it's like a dynamic account that we can move money in and then unlock once you've taken some losses, which we also are building automation around when you should take losses and how. And so really like the goal is you don't have to know anything. You don't have to have any experience. You don't have to do any research. There's no emotional roller coaster. There's no stress. You decide how much you want to invest, and we take care of the
Everything
entire
else.
process.
Exactly. So I have a financial advisor, and this is so much more than what you would get just out of a financial advisor, because there's so many more things, because obviously he can handle my investing and tax loss harvesting, et cetera. He's not looking to say, oh, we have some gains that we can now use to cover some daily expenses that you're incurring, which I think is quite incredible. And what we're investing in isn't nearly as volatile as we get from this. I would love to ask a little bit more about the assets on your platform. And what are the users investing in? Do they want more volatile assets? Do they want just the standard blue chip crypto? What are they interested in?
Yeah, I mean, I'm sure you
Yeah,
got thoughts too.
I can jump into this. So right now we offer crypto. We originally set out to offer stock, to be honest. And so we started from the very beginning with crypto, looking into those kinds of things. And then as we got into it, we were worried about some of those exact concerns. And so we went down the stock route. And it was actually Y Combinator that said, you should go back. you should go back to
A
crypto.
lot of red tape.
Yeah,
But
there's
the interesting
a
thing is
lot of red tape.
your application, from the regulatory standpoint that I know, doesn't really cross any red lines of regulatory red tape at all, because it's simply just enabling users to purchase and then sell, and taxes, and you're handling all of that according to all the
So we actually started the process of filing our Form ADV, had it sent out, and had a response back from the SEC saying the exact same thing, that it looks like you're not really doing investment advisory.
Really, because they see that, you know, using your spending is kind of self-directed. And we have a set portfolio to kind of go back to your question on how we select the assets. So we have a set portfolio for all of our users. Okay? So you don't go in and self-select which assets you're using with Soon. Now there's a ton of other platforms out there where you can go and speculate on the market and try different things. That's not necessarily where we want to be. We may allow some of those features in the future, a little bit more flexibility for the power user. But part of the reason is because we know what works well in our algorithm, because we've done thousands of tests and modeling. And there's really two main things that work really well in our algorithm. The first being volatility, short-term volatility. So big spikes over short periods of time, right? That's the first thing. The second thing is non-correlation. So we're running a lot of models to figure out which cryptocurrencies tend to not do exactly the same thing as Bitcoin. And so we look at those two things, and some other things we look at as well, but those are the main two things we look at. And so there's some proprietary aspects of the way that we build those portfolios, and it's a set portfolio. So you go in, you're just deciding how much money you want to put in. So you're not doing all this research and learning about all the technical. I mean, it's really overwhelming when people get in and like try to understand all the complexities of crypto and try to figure out what should I be investing in. Because to really feel confident in knowing like, oh, I shouldn't put my money in this or hodl in this, then you really need to research it and understand what it is. And that's hard. So we're kind of, we're taking that off of the users. They don't have to do that with Soon. And we found that, like we kind of mentioned before, it's the vast majority. It's like 80% who haven't invested yet, right? And so a lot of companies in our space are trying to serve that 2, 3, 4% that are like power speculators, right?
So the DeFi degen, that's what I like. And that's great, and we love those people. We've done some of that ourselves. They have a lot of volume, those people.
They do. They have a lot of volume, but it's like in a sense, like Robinhood kind of said like, hey, we're going to go and serve people who can't access this stuff, and so we're kind of saying, not in the same way, but kind of saying like, look, there's the bigger group of people who need help, who need something that is easier, or even like just a baby steps, like a first step into crypto that doesn't require all these things. We have a lot of users, by the way, who are still speculating. They still do that on the side, but they're also using Soon. So they like having this side automation tool. They set it up and forget it. And it just runs.
Well, this is such an incredible on-ramping tool too, because like with Robinhood, you can, or other tools, for example, they help you on-ramp into the market. But you are inviting me to stay. There's plenty of reasons to stay with your platform because of all the services and benefit that I get.
Yeah, that's actually a really good point. And so the goal is to be able to support, obviously everybody, especially those who haven't jumped into it. And that's what we've seen work so far. With Soon right now, you set up your account, and that means just verify your identity and a handful of other things, and make a deposit, and then all you do is watch it work for you. And it goes to work for you, essentially. The nice thing about that is that you don't have to worry about all of like, which cryptocurrency should I buy? Which one should I sell? When to buy, when to sell, all those kinds of concerns. And we do allow power users to jump in, but instead of tweaking that speculative stuff, they're tweaking things like, well, how much do I want to reinvest? How much do I want withdrawn? Do I want it withdrawn? Do I want it to build over time? What about my taxes? How much should I set aside? Do I want to turn any of those features off? Those are the kind of things that we allow users to jump into.
Do you ever end up? So one of the things I'm thinking about is these new users coming in, these new crypto users in general, right?
Yeah.
That are being exposed to this for the first time. I would be curious to see what effect it would have on them if, at the end of the month they got to know which things made them money. Just so it's like they're a little more aware that the market's moving and like, oh yeah, Pepe coin went up 138. It was awesome. Like whatever it is that they're doing. I'm curious about exposing them to that part of the market without actually giving them the ability to toggle the dials.
Yeah, you're getting me super excited right now. I'm glad that you're asking these questions because we're going down the same route. And I'll be completely honest, there's more that we need to do in this space. But we already do show this. When you get a liquidation, you can go into the liquidation and see exactly what sold. We're making sure that like on the dashboard, you can see which ones that you made the most on our analytics dashboard that the user can see. But I really like the idea of starting to slowly help them understand, okay, this is what the benefit is. These are the assets that you're benefiting from. This is why you're benefiting from them. Perhaps providing a little bit of news or education around that so they can slowly start to understand more about what it's doing.
Yeah, I think like obviously there's so many things that we want to do to improve our product and to be just really real. Like we're a startup and there are aspects of our product or user experience that are not working well yet, or they're not nearly as good as they could be. And so that's one of the reasons we're raising money right now on Republic and our crowdfund because we want to enhance our ability to not just grow, but also improve the user experience and gather feedback. We've been getting a lot of feedback from our users. And one thing that we have found is that, it's funny because when you're early on as a startup, you get people who are just super passionate. They're early adopters that really love the idea. But at the same time, there's a little bit of frustration because they can see that like, hey, this is really cool. I love the promise. I love most of what I'm seeing. But dude, this part sucks right here. You got to fix this.
And they're not ashamed to tell you that.
No, yeah. You definitely get the
they
feedback.
They make it their life mission. I need them to know.
Yeah.
And to be honest with you, it's like, it's great, and it's like, part of you wants to be like, look, dude, if you just knew how much we have to be doing here as a startup, all the crap we have to deal with,
all the hats we have to wear.
Oh my gosh! If you knew all of the details that underline that little tiny button or that little tiny feature that you're asking for, like, but it's like it's fine. Like, they could never know like what actually is going on behind. But we're excited to be growing in this way and raising on Republic. Part of the reason we raised on Republic is because, first of all, they're the best crowdfunding platform in the world
in terms of volume.
Yeah. But they're very, very careful about who they select. You look at some of those other platforms and it's like there may be hundreds of other offerings at any given time.
And the quality of the offerings is much, much lower.
Yeah, exactly.
Yeah.
They actually, getting into Y Combinator, you have to do a lot. There's a lot of, they put you through some rigor to kind of weed out some of the companies. Republic was not easy. Like there was a lot that we had to do to get in it, maybe even harder than Y Combinator. And I think at this right now, there's like 30 companies that are on Republic right now. So there's only a few crypto companies as well.
Just checked, you're the top trending crypto one.
Yes, we are.
Yeah.
Yes, and
we already blew past our minminum raise.
You
and
already,
everything.
you already, Congratulations on that.
Yeah,
thank you.
Yeah.
Thank you.
And how long did that take to get?
2 days.
2 days.
Yeah.
That's incredible.
We still have 2 full months to run the crowdfund. Yeah.
That's incredible.
Yeah. Well, but it's like we wanted to we love partnering with other entities that give validation to what we're doing, and people can see it and say, we trust that.
Yeah.
But the investors that we're getting off of Republic have given us a lot of great feedback as well.
Yeah.
And they're becoming customers as well. And so that's exciting for us. But yeah, we're a little around halfway to the max. So definitely if people want to invest, they still can.
Yeah.
We still have some time, but it's filling up very fast. So there may not be a lot of time. But yeah, I mean, obviously, we're on a path now and we have momentum and we're getting a lot of customer feedback now. And we're excited. Like there's so many things we want to do with our product that we can do with our product. And so the next year or so is going to be pretty fun.
Yeah.
And so, or go ahead.
If it's on topic, see, I'm about to shift.
So with this next round, what's the main goals and initiatives?
Yeah, I mean, I don't know how much we want to expose about what's coming in our product.
All the magical things.
I mean, obviously, we would love. Right now, we only serve the U.S. and we would love to expand outside of the U.S. We definitely have thought about, should we continue to offer something in addition to crypto, like maybe stocks. Sorry, I keep like drifting away from like maybe stocks or other assets, and maybe at some point we could offer a debit card, things like that. That's more integrated into our platform. These are just thoughts, but I think, the biggest goal for us is to get our product in a lot of people's hands because we know it can help them and improve their financial life. Like, and this is one of the things that is really unique to Soon with most investment options. It's obviously it's emotional and everything, but for a lot of them, it's long term. You're hodling or you're speculating, and so you're taking a very small percentage of your net worth, you're putting in there and hoping it grows over time. But Soon, and this is kind of what inspired the brand and our messaging and everything. Like Soon is designed to give you more control, that you can bring that value into your life in the near term, right? So we call it like lifestyle fintech. This is not like, hey, 5 or 20 or 30 years down the road. This is, hey, I've got some extra value in my account, and that's going to help me to go to a concert next week or to whatever, if I want to. Or I can say, hey, I want to push it out a little bit longer term. I can manage that for myself. But we're here to enable you in your life, or at least boost your life or give you help you, so you have more financial choice in the near term. So that's what kind of inspires me. To continue doing this. Like, we have something that really works. Our algorithm performs, and it helps people, and really finances is one of the biggest challenges in life that we deal with. So having money and or having the ability to grow money is so important, and we have something that can help with that.
Yeah, I mean, and that's like he's saying, this is exactly what we're passionate about. We truly believe that Soon can help a lot of people, and there are two things that need to happen for that. One, people need to know that it exists.
Yeah.
And two, it needs to the experience actually needs to make sense. And those are the two areas that we would like to focus on, because right now, Soon's still a baby. The experience, I mean, we've been getting a lot of feedback. And like you said, the feedback sometimes comes in and loud. You have to make this change. And so we're starting to understand what our users care about and what our users don't care about. And so we're adapting the experience, and we'd like to use some of the finances to make sure that we adapt to that. But even more importantly, people need to know that we actually are available. People need to know that this is an option that they can use to potentially bring this lifestyle fintech into their lives. And so that's exactly what we're working on.
Tell me about your users. Who's your who are your customers? Do you work with businesses looking at specific users? What are you doing?
We get that question a lot about businesses. We don't work with businesses yet, but it is something we fully intend to do, because we've had a lot of people reach out and say, hey, I want to set up a business account that uses this. But to answer your other question, there's a reason that we started with Republic, or ran our crowdfund on Republic, because a lot of those types of users are great first users. We feel like our first target audience would be people who have some money to have some discretionary money to be able to invest and be able to see those benefits. And Republic is exactly that. There are people who invest in a lot of different things already. And we've already seen some of that benefit.
Yeah. And I think like every company has their early adopter group, and these are people that have they enjoy trying out new things. But what's I think unique about us is we have a product that has the potential to serve anybody.
Mm-hmm.
And that's really what we're after, because how many people out there aren't investing? A huge portion of the population aren't investing at all. They're not planning for the future.
Let alone crypto.
Yeah.
Let alone crypto.
And have no idea of the tools that they can use, any strategies.
Exactly. And they're likely, if they set out to, these are problems that have been solved by generations of time and people who've looked at markets. The same thing happens in software development. If you try to approach a problem from a completely new perspective, you're often going to miss things that took years to find. And so like that's one of the reasons that we wanted to create this, is because we want to give a powerful tool that does all of these best practices in one place, so they don't have to worry about missing things that they wouldn't have learned had they not bumped against it.
Yeah, I mean, if you look at it, like, I don't blame a lot of people for not investing.
Mm-hmm.
You know, it's like you have all these new exchanges, and retail investors can go and throw their money all over the place. And it's almost like you're throwing these people to the wolves because they have no experience and they don't know what they're doing yet, you know, and that's not necessarily the best path. You know, I think people need a solution that is made for them. Exactly. And that's what we're providing. You know, we're providing something that these people don't really have a solution right now. And so we can kind of get them in and get comfortable with, okay, this is something I can do. I'm going to go research a little bit more and learn a little bit more about other things, because we'll never do all things investing related, but we are giving a core set of tools. And really what we're doing is we're taking tried and true sound investing principles, right? So dollar cost averaging, not over predicting or like heavy gambling type investing, right? We're not you know, just putting all of your money into one asset at one point of time. We're spreading it out, and then we're not being greedy. Like we're getting you out of the market as fast as we possibly can.
Yeah.
So that you're not as exposed to the ups and downs. It doesn't mean that people don't experience loss with Soon. Of course they do. Like with any investing, there's risk, of course. But we are taking things that have been known as good investing principles, and we're combining them in a new way, and we're adding an experience that is simpler. You know, so even though we have a lot of improvement to do in the app, I feel really pleased with what we already have so far, the level of simplicity we provided, and I think a lot of our customers see that and they're excited about that. So,
and are you converting more traditional investors into their first time being exposed to crypto, or are you converting more seasoned crypto investors to getting out into a more reliable, less anxiety-thrilled journey?
I've seen so far. I've seen it split about right down the middle.
That's incredibly interesting.
Yeah, we're getting a pretty broad spectrum. I would say that more so it's people that tend to be comfortable with trying out new finance products, that are interested in finance in general. But
I have good news. I have a building full of those guys.
Yeah.
They're all here.
That's funny.
Well, cool. Lastly, I mean, do you guys have anything that you want to talk about? Any messaging or any announcements that you guys have that you want to get out there?
You know, I would say that the biggest thing is, you know, we want to invite anybody to come and take a part of Soon. Like we're not just about, like, obviously we could have gone and raised from VCs, angels, but we really love the idea of building a family. We love the idea of building relationships that are long-term. And we want you to not just be a customer of Soon. We want you to be a part of our company and our family. And so that's the invite. You know, you can go to Republic right now. It's right there on the homepage, like you said, republic.com. And you can go invest. The other thing is we would love for you to try out Soon and then give us your feedback. Share with us what the experience was like for you. So that's also really easy. You can go to soon.app, soon.app, and you can download the app right there. You can also go to the app stores and just search for like Soon Crypto or Soon Investing, and we'll pop right up and give it a shot. If you're in the U.S., we serve almost every state in the U.S., so it's very likely that you're able to use it. If you're not in a place we can serve yet, just hang tight. We're gonna get there. But you can follow our social channels and learn, you know, more as we release some more updates on how we progress there. But yeah, I mean, we really live and die by our customers and their feedback. So I think those are the two things that we would we would love to engage with people on.
Ditto.
That's great. Well, did you have anything else? This has been awesome, guys. I really appreciate it. We'll try to throw some links into the Republic link for you guys, and we'll probably drop the soon.app link as well underneath.
That sounds great.
We're on everything right now: YouTube, Apple Podcasts, Spotify. So we'll try to get it in all of those relevant places. But guys, I really appreciate you coming and talking to us today.
Yeah, thank you very much for having us. This
Thanks,
has been a
guys.
blast.
We should probably do this again. Are you guys going to be at Cryptopia?
Yes.
Yes,
we'll
be
yes.
there.
We're
Let's-
planning to be there.
Let's have another chat while we're there.
Let's do it.
Awesome.
Let's do it.
We're going to be camped out in the VIP lounge up top, doing
Right
grabbing every C-level person we can to come chat with
Yeah.
us.
Yeah,
So,
we'll be there too.
cool.
For sure.
And
Well,
then if
thanks
you guys want any certain links in the description, send them over
Yeah.
to Dallin,
Yeah.
and then we can
Perfect.
throw them in there.
Okay. Yeah,
Cool.
I think those are the two. Republic and our website, really.
Yeah.
Well, we could put links to the app stores.
Oh,
yeah,
that's a
we
good
probably
idea.
could do that.
Yeah.
That's a good idea.
All right, guys. Well, thanks so much. Everyone,
Yeah.
thanks for listening. We'll be back sometime soon. Ha. Ha. Sorry.
We kind of went a little bit more. We usually don't.
I don't know. Did
Hit.
you want to go product heavy or did you want to go?
No, product heavy is important. We kind of pushed a little bit more like the anti-fragile stuff is a little bit better fit for the crypto
Yeah.
world. And
Yes,
so that's why
definitely.
It's kind of cool.
I don't know if we didn't talk about that before, Mike. I hope you were comfortable with that. But
Oh, I loved it.
I thought that
Yeah.
was
Okay.
great. I thought that was a great
Mm.
segue. I think one thing I really like about this whole idea is it's invite me to invest, give me tools that help me invest that are and historically proven to do well,
Mm-hmm.
and then give me incentive to put in more money than I would any other platform because of the services that you offer.
Exactly.
yeah.
Oh yeah, you're
Which is-
speaking our language.
Which is quite unique because I
Yeah.
can't think of
Yeah.
because my main mentality is I dump more money into my Schwab account and I'm like, well now I gotta it's complicated to get it out and I don't
Yes.
have any real
Totally.
reason because then
Yep.
my main thing is I have bucketed accounts. I have short term, mid term,
Yeah.
long term.
Yeah.
Yeah.
And so my short term highly liquid, but I
Mhm.
still takes 2 or 3 days to liquidate and all this stuff. And so
Yep.
but this isn't it's not watching my bank account and just being
Well, if you look at it, we think the whole industry is getting it wrong.
Yeah.
Everybody's getting it wrong. So most companies that are serving retail investors and helping them to invest in crypto are making money off of volume. Okay,
yes,
so Coinbase, for example,
Yes.
86% of the revenue
is
is
transaction.
transaction
Which
fees.
incentivizes the wrong behavior.
It's not what their product does.
Yeah.
Their product incentivizes small amounts, small deposits, infrequently, and hodling.
Yes.
And so, but for
Because
us,
assets under management are also things. That's
exactly,
super
we're a
important.
sweep account essentially.
Yeah.
Like we have more features in addition to that, but we incentivize our user, and what we've seen with our users is what'll happen is they'll start off with a smaller amount, $100,
yeah.
$150 a month, and then as they see the returns coming back,
Yeah.
the deposits coming back, they bump it up.
Totally.
So we make way more per user because we can generate more volume than any
Yeah.
of our
Because we make
competitors.
money on the actual movement of the funds.
We're
The transfer
yeah.
of funds. The
Yeah.
deposit of the funds. Yeah. There's a transaction fee to turn.
Yeah, there's a transaction exactly.
Yeah.
And I mean, if you think about it, that's what users really want, especially the users who are hesitant to get into investing because it's a scary thing to take a chunk of your money and put it away for a long time,
Yes.
which is why I think a lot of people haven't invested. But if it's coming back to them and they see, oh yeah, I'm seeing the returns and I'm able to go and buy more groceries because of this, then yeah, they'll be more willing. And we've seen it
Exactly.
happen.
I've been a long-term fan of Bogglehead's lazy portfolios.
Mhm.
And, I used M1 Finance early on with the bucketed pies and stuff. And I really like those tools and that stuff. But
Yeah.
for crypto, there hasn't really been something. There is nothing to my knowledge. I've seen some tools that for dollar cost averaging, and you can dollar cost average on Coinbase or
Yeah.
whatever centralized exchange, but nothing with this feature of selling with it and also incentivizing me to put more in there.
Yeah.
Because the drip thing is so I was wow, so it's drip in and that's just
Yeah.
very,
It's-
very, very
It's interesting because it sounds really simple,
no,
but when you get into
When you
doesn't.
try to do it
Not to
manually,
me,
though.
but
yeah.
no, it's
it's
something so it would
super
be,
complex on the
it
back
would
end.
be so tedious to do manually that it
Yeah.
creates such a need for the service.
Yeah, exactly.
There's a lot of complexity as well into the way that we're exiting, the way that we're managing your thresholds.
Yeah.
It's as to how much you gain is available or not.
Yeah.
whether or not it is a gain. Also, when do you take losses? Those kinds of things.
Yeah.
There's and this has come from like literally thousands of simulations that we
Yeah.
built out.
Is the
Tens
tax
of
stuff, like,
thousands.
I mean, that's got to have taken you at least a third of the time, just like worrying all the tax stuff.
Yeah.
Yeah.
There's a lot of complexity there as well.
That took us a long
so,
time.
It's so tedious. And so I remember when I first invested in Fundrise, I didn't put enough in. I ended up paying more for finding each one of because they put me in all these different like series LLCs, and I had to file more just to pay for that. And I had all of my gains that entire year. So you start to run into this problem where like there's a barrier to entry that's expected.
Mhm.
Yeah.
You need to put enough in to kind of get enough out. And I saw in your guys' like Republic it recommended like because you guys make good money if the people have $150 going in, but that increases substantially as people increase their.
It does.
And so you're looking at a little bit more of a sophisticated investor,
Mm-hmm.
but one that would be there is no tool to help you diversify this level of sophistication.
Yeah.
Yeah, absolutely. Absolutely. I mean, there's some tools out there like Poloniex and a few others that have the ability, but it requires a lot of manual configuration.
Totally. Yeah.
And it takes and the other thing with configuration is you have to track it, you have to watch it, you have to, and then you get emotional and you start
And
speculating.
as soon as you get emotional, it
That's
breaks
why I have
down.
an advisor because I want to separate
Yes.
Exactly.
my level
Yes.
of emotional.
Yep.
Exactly.
This is funny because like I have like I usually put like 20% of my income into crypto, but like he doesn't manage any of my crypto. Like he only manages my stuff. So I'll definitely be checking you guys out. And see.
No, we've talked with a number of financial advisors. In fact, we had a group invest in us early on. They're an advisory group, and a lot of financial advisors want our product. So this is one of the things we want to build. Is like a back end for
that's incredible.
FAs.
Cool.
Yeah. There was someone that we were talking to just the other day who was like, "Yeah, you're
is
basically doing my whole business."
Yeah, and well, that's the same tools that they have with Schwab because I know they're not going in and out of my account. It's me and whoever else shares my risk tolerance. Like, they're going in and out of all of us with the same trades.
Yeah. So the way we see it is we've got a retail tool. That's the first one we're coming out with.
Yep.
Yeah.
Business will probably come next.
And is the business
And
one
then
focused on
financial
just
advisors.
offering the same tool just for businesses and their accounts?
Yeah, so there's some really exciting things that you can do on the business side as well. So not only can businesses use this as like a slush fund, but we've also had businesses say, well, what if we were to set this up to automatically have some of the gains that we realize go directly into employee incentives? So like
that's
directly into bonuses
Yeah,
and
I'm
stuff
like, what
like
is the
that.
additional incentive for a business?
Yeah.
That is very smart.
Well, and then on top of that, you also have like the tax benefits too. So like if you are realizing your gains, like say you have some level of a stop loss or something like that, you realize gains, you can take that off of your taxes from a corporate perspective as well.
Yeah. We're working on a deal right now with a guy who owns a merchant services platform, and what he wants to do is offer this as a service to his clients, basically for free.
Yeah.
And then he would match it. So he would take their earnings and he would do a match. up
Almost
to
like a
certain
business
amount.
401k.
Yeah.
Yes, as a means of retention to his own clients.
Yeah.
That's cool.
Yeah.
That's a cool idea.
Yeah. So there's a lot. There's so many
There's
things.
so much stuff
that we can do with
to get
this
into.
once we get it.
What does
going,
Republic
so.
take from you guys?
I think it's like 2 or 3%.
Yeah,
They
it's
take
like
some upfront.
Not huge.
They're actually better, I felt, because we talked with Seed Invest, we talked with WeFunder, and we liked Republic's
Their
terms
quality
better.
is so much higher than
Mhm.
everything
It really
else.
is.
Yeah.
And the people on Republic too.
Yeah,
Yeah. So
they
how does the
invest a lot.
investment on Republic work? Like if I go drop
It's-
$3,000 or something,
Yeah.
like
It's not accredited, right?
You mean 5
You don't. Yeah, you don't.
I'll give you my full money.
That was really clever. So you don't have to be accredited. You basically become part of
Upsell.
this SPV that
Oh,
then
okay.
just sits
Yeah,
on
it
the
was
cap
a-
table.
Yeah.
Yes.
Is it crowd safe?
Yeah, it's a crowd safe.
Yeah. So we can only raise up to 1.2 per year
That's what I thought.
and
yeah.
only 5 million total.
Mhm.
But you can do it as an LLC, you can do it as an individual,
Yeah.
various
If you
different
did
types of
crowd
entities.
CF, you could have done 5 million, but you have to be a different regulatory type, right?
So we are doing it is a Reg CF.
But,
You are Reg CF,
but-
but
but there's limit up to 1.2 per year.
It's so you can raise up to 5 million total, but it's 1.2 per year. So we could
That's
do
what they told us
another
anyways.
crowdfund later.
The Reg A, you
yeah,
can
tier
raise
1, tier 2,
whatever
50.
you want.
It's
Yeah.
50 to 75 million, but it's per year.
Oh, is that what it is? Okay.
Yeah. So I raised for, I had a fractional real estate one that was like crypto. So basically we took fractional real estate assets, put it, and then ran it on like basically a peer-to-peer marketplace.
Yeah.
We ran it on blockchain for it to be like totally transparent and automate everything.
Mhm.
And yeah, we were looking, so we had to get, it was this constant battle of like, you go the fully regulated route, you basically lose all your money to like broker dealers, transfer agents, and everyone there. But we could go up to like Reg A, and then we could get offer up to like $75 million of assets on the platform. Or it was fight the battle and claim that you're not an investment vehicle,
Yeah.
which is like even more scary, and just say
Yeah.
like, oh yeah, this like fractional real estate you're buying is not considered a security, which
Yeah.
is like a really hard
Yeah.
battle to like.
Yeah.
So yeah.
Do you guys know Sahil from Gumroad? Yeah, so he ran a Reg A crowdfund on Republic, and they maxed out within like hours.
Seriously?
Yeah,
Holy
within hours.
crap.
They
His book-
talk about
his
it.
book is my favorite
Yeah,
product book.
he's
Entrepreneurial.
amazing.
Yeah.
Yeah,
He's got-
I met him out at the Convoy event that they just recently had.
Oh really?
yeah,
Are
that
you
lunch.
Convoy investing in you?
No, but one
Wow.
of their kind of. So Scott Paul did.
Oh okay.
Yeah.
Scott Paul's interesting. He wanted to write a check for us, but that when we were raising, his check size was like $25K, and I was like,
Yeah.
no.
Yeah. I think he put a lot more of that into Giddy.
Yeah.
He did.
He put
He also put all of
Did
his
you-
attention
Did
into
you?
Giddy.
They
Yeah.
gave him a carry. Did you? That's
Oh,
did
really?
they really?
yeah.
No way.
like do you know details on what that
It's not me to
Means?
say, but
Sure. Yeah.
but yeah. There's that was why he put so much attention into that.
It's
so.
interesting.
That makes sense.
Maybe we should give Scott a carry.
he hasn't put as much attention into us. We've kind of been like this hidden thing in Utah for a
I'm
while.
gonna show him
Yeah.
this episode. We'll see what
So,
happens.
Yeah.
I went to Sahil's like book announcement when he launched his book
Yeah.
at Convoy because we were chatting with him for a while.
Yeah.
We met some cool people there, but yeah, but yeah. Anyway.
We couldn't get Sahil
Yeah.
to invest in us. Maybe we'll be able to convince him.
He might come
sometime
in
the future.
He might come in. Yeah. Giddy's done a good job. They raised more than we did, and we also went through some crap where we had to pivot and everything.
Well,
and
they've raised something like 15 million or so
Yeah.
at this point.
That's interesting.
we've not raised that much.
We've
I mean,
raised
I-
2.5.
I talked
Yeah.
with there was kind of like a bait and switch mentality what they did because they raised and then pivoted completely, and like their investors were like, because we chatted with all of their investors to see if they wanted to invest in us,
Sure.
and we got like just they were absolutely hated. And I was shocked when they raised again because I thought they were going to tank. Like I legitimately thought they weren't going